Take me through what these numbers tell you and what they imply about what the Fed might do and or say next week.
Well, the Fed has got to be really happy with these numbers. They're just stunningly good. And the cooling of inflation through productivity growth, you just couldn't get it a better way. There's almost a tinge of the 1990s boom in here, and I think the Fed's got to be feeling pretty good about itself. That said, it still has sort of put itself in this position where it's not ready to cut rates in March, but I think by the time they're going to start discussing rate cuts in earnest at the January meeting, and then the debate's going to get really heated in March to have that May cut instead of waiting until June. This is, at the same time, we have some people rotating into voting positions who've already sort of staked themselves out as wanting later rate cuts out there, and I think that's what the navigation is going to be. But it's going to be hard for Chair Powell to contain his enthusiasm at the press conference once again after this statement comes out next week.
Steve, once you throw in food and energy costs, the headline inflation, 0.2% for the month, held steady at 2.6 annually. The Fed would like to see it maybe a little lower, but this is pretty doggone close to their target, isn't it?
Yeah, Tyler, where are the party hats and the kazoos? I'm just wondering. I mean, here we are. The thing that was the first good thing that happened was that we have the core with a 2 handle on it for the first time in, well, who knows how long it's been that low. I'm looking at the 3-month annualized core rate as 1.5%, and then Powell's super core, which is services ex housing, at 2.16%. The problem is not where it is now. The problem is how long it's been there, Tyler. And I think the trouble is I only have this one statement by the Fed to go on, which is when they're going to cut rates. And that is that inflation is heading back down towards the 2% target sustainably. And that you can't really make the sustainable argument, especially just to undercut the data I just gave you. Some of this 3-month and 6-month annual stuff can be very volatile because of things like seasonal adjustments. Bottom line is you're going to have to see it there for a little bit. I don't think March is enough of a little bit for the Fed to have that confidence that it's headed down to 2% on a sustainable basis. So I think it needs a little bit more time, but the numbers are all real good.